Welcome back. Well, a flattish start on the Nifty is what we're seeing, but a lot of companies are reacting to its numbers. And Cholamandalam Investment, well, they posted a mixed set of numbers. The business momentum looks strong, with the AUM rising close to around 20% in comparison to last year. Dispersals as well were up nearly around 70%. This, however, has not translated into profit growth. The NIMs have come down to around 7.6% odd, but that's something that the management had guided for in the last time we chatted. Well, Mr. Arulselvan D, the president of the company, as well as CFO, joins us. Hi, sir. Morning. Thanks so much for joining in. Well, a couple of factors we want to focus on. One is on the NIMs. They've come down to around 7.6%. Now, I think your cost of borrowing has moved up a little bit, and effectively 50% of your borrowing is on floating rate. So what's the guidance on the NIMs from here on? Will it hold at around the 7.5%? And earlier you were guiding for AUM growth of around 15%, I think mid-teens. Do you want to revise that number?
Yeah, the AUM growth will be a little bit more stronger is the current prediction going by what we have seen as the growth in Q2, and we expect more traction on the disbursements in the coming quarters, being good festival quarters as well as good harvesting that's expected in the Q4. So we will look at around 20 to 22% AUM growth as we move forward for the full year. And if things pan out better, it can even be better than that. With regard to the NIMs, I have spoken earlier also. For the full year, we expect the cost of funds to increase by around 50 to 60 basis points going by the trend. And as of YTD level, the cost of funds is still lower than compared to last year. But yes, as a quarter on quarter, that is Q1 versus Q2, there has been a drop because of the cost of funds increase. This is expected, and this is what we have guided, as you rightly pointed out. We expect the NIMs to hold in around the 50-60 basis points, but that would also be predominantly driven by the mix of what products we do. So that is something we will keep revising as we move forward, because the market, based on market, we will be moving with scaling up or scaling down on the products that we do, where the yields are very wide.
Okay. Mr. Selvan, good morning. So consolidated AUM grew 25% in the quarter. You're saying for the full year should be somewhere in the region of, you said 22-23%, right?
Correct.
Q3 and Q4, but are good quarters, right? There is a bit of an acceleration. So how should one read this?
No, I just want to be a little bit conservative, because while monsoon is good, etc., we still want to see the traction that's happening in the SRTO segment, which we are focusing on within the vehicle finance. The new businesses that we have been scaling up are of shorter tenor to a large part of the business. So the churn will be more, but it may not ultimately result in the AUM growth significantly. The LAP and HL are growing faster. They will contribute to a large extent because they stay on the book for a longer period, and that would be helpful. I think we will give you a more clearer, reasonable target by end of Q3 rather than now, because we want to assess Q3 before we give a larger number on the AUM growth.
Sure. Okay, so for now, we'll go with this 20 to 22% AUM growth target that you've put out. Mr. Arulselvan, good morning. Within vehicle finance, you cater to a lot of the segments, right? Whether it's two-wheeler loans, commercial vehicles, tractors, even construction equipment. And since your loans are largely low ticket, you start from 1 lakh onwards, you'll be able to give us a better sense of how the rural market is recovering, because we are seeing some nascent signs of recovery, but it's not as strong as what we're seeing in urban. So you tell us, what is the situation on the ground, and within the vehicle piece as well, which one is recovering the fastest?
Yeah, so the rural market is, as you know, highly dependent on the monsoon. While overall monsoon seems to be good or above average, pockets of areas have shown different, levels of either shortfall in monsoon or, in some places excess. So this to some extent skews the rural income. So that's where we are also being little, conservative with regard to our approach on committing higher numbers on AUM growth. But the way forward is looking at the coming festival seasons and a reasonably good harvest, for a predominant part of the country, especially in the context that we are spread all over the country almost equally. So we would, while there could always be some regions or geographies where there can be impact, we will see some amount of reasonable growth in the rest of the locations. And the other factor that needs to be also considered is the government spending that is expected to happen, especially in the context of elections coming up shortly. So that should again put up more earning potential in the hands of the consumers, triggering consumption and thereby triggering vehicle requirements for movement of material. This is the long and short of it. So we expect a reasonably good traction in the rural segment, and to some extent it will be dependent on a good harvest that comes up in the Q4.
All right. So, you said your cost of funds could go up by around 50 basis points, but you're still sticking to NIMs of around 7.5%. Should we work with 7.5% or 7 to 7.5%?
Yeah, I would say so. See, as a little while back, Sonia mentioned, the mix of our vehicle finance book is very wide. We have, yields ranging from 10.5% to as high as 23-24%. And we keep moving between these products in the context of how the demand picks up in which segment, and we have the expertise to do any of these product lines. We have demonstrated that over the period, but that is the crux, and that is also to a bit, the reason for our success in spite of various, movements in the demands for various products. But this has an impact on NIM because the product yields are different. But on the flip side, the higher yield products will have higher OPEX and higher NCL. So to that extent, it will offset a bit. So while we do higher yield product, you may also have a higher OPEX. So the NIMs can move depending on the product mix, but the ROTA is what we focus on to make sure that we deliver a pre-tax ROTA of around 3 to 3.5%.
All right. Mr. Selvan, thank you very much for joining us. Good speaking with you. Appreciate you joining in with that perspective. So, the commentary is good. The guidance is a bit conservative. I want to be conservative, but we'll see. Chola right now about 1.25% higher. The market's absolutely flat, 13-14 point change.